IMXI International Money Express Technical Analysis. General Overview and Trend. IMXI has demonstrated extreme volatility over the past 3 months, characterized by a persistent downtrend followed by an explosive reversal. The stock began the period at 11.44 in mid-May and experienced a steady decline, reaching a low of 8.58 by early August. This represented a significant 25% drop from the starting point. The trend shifted dramatically on August 11th with a massive 56% single-day surge to 14.90, accompanied by extraordinary volume. This violent reversal suggests a fundamental catalyst likely triggered the move, though the longer-term trend remains technically bearish as the price still trades below key long-term moving averages. The overall pattern shows a capitulation phase near 8.50 followed by a sharp recovery that appears overextended in the short term. Price and volume. Price action reveals a clear downtrend from May through early August, with consistent lower highs and lower lows. The August 11th surge from 9.28 to 14.90 represents an extraordinary deviation from the established pattern. Volume analysis confirms the abnormal nature of this move, with average daily volume around 300,000 shares throughout the period. August 11th saw volume explode to 10.2 million shares, a 3,300% increase that perfectly coincided with the price jump. This indicates massive institutional or speculative participation. Notable volume spikes also occurred on May 30th, 830k shares, and June 13th, 399k shares, during downtrend phases, reflecting panic selling. The Chaikin oscillator at -297 million suggests ongoing distribution pressure despite the rally, raising sustainability concerns about the recent move. Moving averages. The current closing price of 14.90 stands above all short and medium-term moving averages but below critical long-term levels. Short-term averages are significantly below: SMA 5 at 10.35, EMA 5 at 11.10, SMA 10 at 9.67, and EMA 10 at 10.26. Medium-term averages are also well below: SMA 20 at 9.66, EMA 20 at 9.96, SMA 50 at 10.21, and EMA 50 at 10.33. However, long-term averages remain above the current price: SMA 100 at 11.14, EMA 100 at 11.68, SMA 150 at 13.34, EMA 150 at 13.44, SMA 200 at 15.07, and EMA 200 at 15.04. This configuration indicates a short-term oversold bounce within a longer-term downtrend, with the 200-day SMA at 15.07 acting as immediate resistance. Technical indicators. Momentum indicators show extreme overbought conditions. RSI 14 at 82.7 signals severe overbought status, while Williams R at -5.53 and MFI 14 at 87.1 confirm this exhaustion. MACD at 0.16 with a positive histogram of 0.40 shows short-term bullish momentum but divergence from the longer trend. Stochastic oscillators present mixed signals with K15 at 54.7 and D15 at 32.0 suggesting weakening momentum, while K5 at 76.0 and D5 at 73.5 indicate overbought conditions. CCI 20 at 597.2 reflects extreme deviation from the mean. Trend indicators show strong momentum with ADX 14 at 31.4 and Arun up at 100.0 dominating Arun down at 76.0. Parabolic SAR at 8.62 supports the short-term uptrend. Volatility indicators reveal expansion with Bollinger Bands at upper 12.16, middle 9.66, and lower 7.17, with price above the upper band. ATR 14 at 0.75 indicates moderate volatility. Volume indicators show Chaikin oscillator at -297 million suggesting distribution despite the rally, while ultimate oscillator at 77.8 confirms overbought conditions. Linear regression. The 20-day linear regression shows a steep negative slope, confirming the dominant downtrend. However, the August 11th close at 14.90 is significantly above this regression line, indicating a violent deviation from the established trend. This divergence often precedes either a sustained reversal or a sharp mean reversion. The regression channel currently projects bearish momentum unless the price sustains above 11.50, suggesting the recent move may be overextended. Opening estimate for next trading day. Given the extreme overbought conditions and massive volume spike, IMXI is expected to open between 1420 and 1470. Profit-taking pressure may lead to a gap-down opening, though residual momentum could support a flat start. The 10-2 million volume suggests institutional involvement may provide near-term support, but the overextended technical indicators favor some consolidation. Support and resistance analysis. Key resistance levels include 1507, SMA 200, 1550, psychological, and 1600, May high. Support levels are at 1350, psychological, 1200, gap fill, and 1033, August 5th high. At the current price of 1490, the distance to first resistance is 0.17 and to first support is 1.40. The proximity to 200-day SMA resistance suggests significant overhead supply. Intraday movement may see an initial test of 1507 resistance, followed by rejection and a move toward 1350 support, given the overbought conditions and proximity to key resistance. Intraday high and low estimates based on ATR 14. With ATR 14 at 0.75, the estimated intraday range is a high of 1565 and a low of 1415. Given the recent volatility, actual range may exceed this, particularly if follow-through buying or profit-taking emerges. The proximity to resistance suggests the upper end of the range may be difficult to sustain without fresh catalysts. Possible scenarios. A bullish scenario would see sustained momentum above 1507 triggering short covering toward 1600, requiring volume confirmation and RSI stabilization above 70. A bearish scenario involves failure at 1507 resistance leading to sharp reversal toward 1350 support, with overbought indicators suggesting high probability of mean reversion. A neutral scenario would involve consolidation between 1400 and 1500 as the market digests the spike, allowing technical indicators to normalize before the next directional move. Conclusion. IMXI remains in a technically bearish long-term trend despite the explosive August 11th rally. The 60% single-day surge appears overextended, with multiple indicators signaling exhaustion including RSI above 82, MFI above 87, and CCI above 597. While the price action suggests a fundamental catalyst, the failure to reclaim the 200-day SMA at 1507 leaves the dominant downtrend intact. The extreme volume divergence creates high uncertainty. This could mark either a lasting reversal or a short squeeze-induced blow-off top. Traders should watch the 1507 level closely. A sustained break above would shift the technical outlook bullish, while rejection could lead to rapid mean reversion toward 1200. Given the elevated risk, position sizing and strict stop losses are essential. The current setup favors experienced traders only, with optimal entry opportunities likely on a confirmed break of 1507 or a pullback to 1350 support. The stock's extreme volatility makes it unsuitable for conservative investors.